Let's start with dollar Canada. That is a pair that is on my radar. Hasn't been the best pair for me as of late, but hey, it is what it is. So let's go through that IPDE process. Ron says took a big win on New Zealand or pound New Zealand yesterday. Well done. Let's go through our IPDE process. We've got the market doing this: swing low to swing high, outside return, new structure high. What do we call this type of movement? I guess it could be ABCD pattern. I didn't even notice that. Yeah, look at that. ABC, yeah. I wasn't looking for that answer, but yeah. ABCD pattern. This is what? We're bullish, right? I should have said that. Bullish, right? Swing low to swing high. Outside return. This is the 3 steps we need for a bullish trend. We need a move from low to high. We need a retracement. We need a new structure high. Then our market travels down, 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 down. We get to previous level of structure support. We hold. We hold, we hold, we hold, and then we break. Lower low, lower close, right? We call this what? For a new structure low as well. What do we call this? Bearish what? Bearish what? We're not in a bearish trend. Yep. Bearish rotation. We violated our previous outside return. We follow that up with something like this, right? This is going to be your new outside return. So think of this as your initial structure low right here. This is going to be your outside return. Now, technically speaking, we're not in a bearish trend yet, right? Until we get what? And if you don't know this stuff, if you guys are new, this is the type of stuff you need to master first. Yep. In order to say that we're in a bearish trend, we need a lower low, lower close, right? So we have, again, that 3-point move. 1, 2, 3. All right, so right now we're in a bearish rotation. You can head and shoulder traders, you can look at this as a head and shoulder with a slanted neckline as well. So my anticipation right now, if I had to make a choice, because again, I want to decide what side of the market I want to be on. If I had to ask myself, where is price action likely to go? There are 2 places. We're either likely to go up here, or we're likely to go down here, right? This is our outside return. This is our previous structure low. So keep that in mind as we go down to our 240 chart. Here we go. Somewhere. I kind of want a clean chart here. Thought I had a clean chart. Here's my Canada chart. Let's go to Canada. And we do have that cipher formation. Too big for me, but we'll draw it out. We'll do that a little later. But again, here's our move. We're zooming in some. Now within that move, again, there trends exist within trends. So you see the same thing here. You see new structure high, outside return, new structure high, outside return. We refuse to put in new structure high. And then we put in, again, what do we put in here? Looking at our last 2 outside returns. Lower low, lower close, right? So when you see this type of movement, what are we thinking? Are we thinking when making our prediction, again, IP, identify, predict, when making our prediction, are we thinking there's a better opportunity of the market to go bullish or bearish from this level? Mike, I wouldn't even worry about when to hop in trades yet, Mike. Just worry about reading a price chart. I know you're on the edge of signing up for our 12-week transformation course, so I'm gonna try to halfway treat you like a transformation member. Don't even worry about how to take a trade, right? Don't worry about how to take a trade, when to take a trade, how to get involved, how to get out. Don't even matter about that stuff. Or don't even worry about it. Worry about how to read it, right? Worry about how to read it. Don't worry about putting the ball into the hoop. Worry about getting that nice flick as the ball spins off your fingers. Like those Cleveland Cavaliers last night. How about that? Who said it was over? Who said it was over? Believe land, baby. Believe land. Anyway. I'm just happy to see a series. But yeah, bearish is what you guys were saying. Bearish, bearish, bearish. And if you're brand new to the live room, welcome. If you're brand new watching this on the recording, welcome. I have shiny thing syndrome, so I tend to get off on all types of tangents and rants. It also makes me a very good trader because I can go from one thing to another, but get used to it. All right, so if we're thinking bearish and we're making a prediction, right? Identify, predict. If we're thinking the market's going to continue bearish, the next question I have for you today is, where is price action likely to go to? Danny says, hope it's the Fib inversion I took. I saw that on our chat. Yeah, a retest the structure. Something like this, a pullback and a move down. Does that make perfect sense to everyone? Does it mean it's going to happen? No. We can go straight down. But when we're looking for opportunities as traders, right? If we want to get short, I don't want to get short right here. I want to get short as the market's pulling back. And then I want to look to see how can I hop on this ride back down. So that's the question we have for the day with this pair. How can I hop on that ride back down? And again, we have news coming out in about 10 minutes. Now there's two structure levels I see, right? We have two DSR levels. One is right here. One is up here. Obviously, we're going to concentrate on the first one first because that would be the first opportunity. And if that doesn't work out, you would have a second opportunity up here. I actually really like this structure level. There's a lot here if you look at it. Doop, 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 doop. So we'll see. But let's head down to our hourly time frame, and I'm going to mute the microphone. Give me a second to sneeze real quick, and we'll continue our analysis. All right, so let's go back to the hourly, and let's see where or if we can get involved. Again, first level is going to be right here. Here's our previous structure support level that was broken right about 127.70s. 127.70s. And I'm looking at the recent ebbs and flows in price action. Again, I think this is the better level of structure up here, but we can certainly find some ways to enter. Let's see what we're doing here. Let's just measure out what price has done. Swing high to swing low, outside return, new structure low, outside return, new structure low, a little bit of outside return right here, new structure low, outside return, and then we get one of these right here. Now, Danny entered on a 1618 inversion trade, Fibonacci inversion trade, which would mean taking your Fibonacci extension tool, inverting it from this previous structure low right here to your previous structure high, back down, and looking for that 618. That 618 also comes in right at what? Yeah, previous structure. Look left, structure leaves clues. Now, these are all minor structure levels, so take that for what it's worth, but it is structure. You also have a 618 Fibonacci retracement at the same level. Those are the two golden means lining up. For you guys that have studied Fibonacci, you know that the golden mean or the golden ratio that makes us all perfect, the length of our what? The length of our elbow to wrist and wrist to finger, you know, is the 1618, and the inverse of that is the 618. You got both those lining up at the same area. So 27.53, not a bad area to get short, not a bad first area to get short. Let's head down to our day trading time frames and see if there's a reason for entry. Because that's the thing. Unless you're a very aggressive trader right here, you can analyze this and say, hey, good level to get short, but is there anything in my rules that would allow me to get short? And I know many of you aren't as aggressive to say just sell it at market, right? So the question is, what do you need? What would you be looking for here? And you're going to run into that a lot with trading. You're going to find opportunities where it's like, it's lining up right where I want it to be, but I just don't have an entry reason. And it stinks because you're going to make a lot of really, really good predictions, yet not be able to get involved. And this may be one of those situations. But let's go down to the day trading time frames, the 15 minutes and the 5. We'll check out the range bar chart, see if that makes the picture any clearer. Unfortunately, it doesn't look like it. So we may be in one of those situations where, hey, it's a good level, but there just may not be a reason to get involved unless you're a super aggressive trader, meaning you're just putting a limit order in. All right, there we go. So two things I would look for here. And again, this is going to be one of those, I call these decision points, simply because this is where you would make a decision. This is what I should say this is where the market makes a decision for us. And this is kind of the cool thing, difference between more of a professional trading mindset. I don't call it professional trading mindset, but an experienced trader's mindset and a novice trader's mindset. A novice trader is going to look here and try to make the decision already. They're going to be like, okay, I'm going to get long, I'm going to get long, I'm going to get short, I'm going to get short. We don't know. This is one of the points, kind of like New Zealand dollar, where we use that if-then thought process. Are all of you guys familiar with the if-then thought process? Hey, what's going on, Lax? Been out spending my winnings from this morning. Oh, I hate you so much. We spoke about competition and motivation earlier. I've had my finger on the ban Lax from room button for like 3 years, but he motivates me. Decision point. Yep. Two options. If-then thought process. If price action gives us a lower low, lower close, then I predict a what? Continuation to the downside. If price action holds here, then we can predict a move to the upside. So the choice isn't up to us. The choice is to the market. It's that if-then thought process. If we get a lower low, lower close, then I look for trend continuation. If we get a structure hold at support, then I look for a counter trend trading opportunity and a chance to buy it up. So those are the two options that we have here. Let's go down to the 60-minute chart. We have it in about, what do we have it in about? About 10 minutes. You'll have a double bottom on your 15-minute chart. If you're on the 5-minute chart, you have a double bottom already. All right, so I'm going to go ahead and buy this right now as a day trade at our 5-minute chart. Let's get long euro dollar on double bottom. Range bar charts, guys. You're seeing it over on the range bars as well. So I'm long euro dollar, 113.34. Right? Very small stops on here. Let's get stops below previous structure. Right? You're looking at an ATR of about 5 pips. So if you're taking the low right here, you'd be about 113.22 for a 1 ATR stop. A 2 ATR stop would put you at, was it 18? 17. Will give you a 2 ATR stop. Right? Either way, they're below structure. Get over here. Either way, they're below structure. And they need to pick, where do you want to look for targets at? Do you want to look at a retest of structure right here? 113.50. That's probably going to be your safest level. You can also take that 382. We talked about this yesterday. Swing high to swing low. Look for that 113.61 level. If you go to the hourly chart, I know some of you are probably thinking you can play for a retest of structure highs. You can. I certainly would recommend. I don't think this is a bad idea for an extended target, but I think you should have a much more conservative first target. And again, that's playing for a move back up to 114.13s, right? 114.13s right in here. All right, so let's go down to the 15. Let's get some targets on here. I'm going to go right here underneath the 382, 113.59 for my targets. Remember, in the syndicate, we're only taking one target, one in, one out. So that's going to be the only target right there. This should be at 17. Get down there. Sorry, I'm trying to do two things on two computers at once. I'll be shooting for a move back up the previous structure as well, or for secondary targets on my personal account, though. So for you guys that trade secondary targets, again, right up here, 113.88. I'm going to be going for about 114 flat. I'm not going to be too concerned with 15 extra pips and fighting off an even handle here. So let me just make sure that is in. 113.98. 113, was it 17s? 13, 17s. And 59s were first targets. 59. Good. All right. Let's take a picture, put it into our syndicate here. All right. So took the long entry earlier, got skunked out. This is now a trend continuation opportunity, right? Lower low, lower close. What I'm going to wait for is a retest of previous structure. Here's the first level right here. Technically, your zone is here. Retest the previous structure and a chance to hop on the trade again. So I'm going to be watching this on the range bar charts. Again, looking for a move into this zone right there. There's actually a few different opportunities on the range bar chart. This may also be a potential cipher formation. Yeah, look at that. So again, not giving up on the pair, not throwing it away because I took a loss on it, but having a short memory, erasing my charts, reevaluating, and looking for the next opportunity. There's a few different ways. There's an aggressive way right here. This would be a bear cipher formation on euro dollar up at 113.57. I would use this as a trend continuation setup, but you can use this. There's about 17 pips of potential profit as well. You also have your first potential reversal zone right in here between 113.28s and 113.53s. And again, you can look at this. You may not be able to see the cipher on the 5-minute chart. Oh no, you can. Yeah, you can see the cipher here as well on the 5-minute chart. But this is what I'd be looking for next on euro dollar. And again, the key is, right, short memory, guys. Short memory. You can't get emotionally involved in these trades and, you know, have a personal vendetta against the euro because it stopped you out. You know, it happens. It's trading. What's important is you're able to shake that off, right? You're like a quarterback. You throw an interception, right? You don't sit there and be in a funk about it for the rest of the game. You throw an interception. Next time your offense is back on the field, you shake it off and you get back to the game plan, right? You get back to the game plan and you execute the next play, and that's what we're looking to do. So, and that's the cool thing about these structured trades. These structured trades, you know, if you're stopped out, they most likely turn into opportunities in the other direction. So keep an eye on the range bar chart here. You can keep an eye on the 5-minute chart as well, but wanted to bring that up. All right, let's go to euro yen. Again, well done for you guys that made some money on this. We're looking at a lower low, lower close now. We're still in a trend continuation mode. We've been in a trend continuation mode ever since we broke out of that wedge or that descending triangle. And we're still in it. So we're still looking short, 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 short. So let's go down to the 240 chart. I feel like all of my Todd Brown stories, at some point, it's us going out to eat and him buying every appetizer and us eating like none of it. Every story is like that. I feel like such a waste. I'm like, we're wasting all this food, Todd. Yeah. You feel bad, but he just wants the best. All right, so yeah. Swing high to swing low, outside return, new structure low. Looking for trend continuation on the lower time frames here. So we're looking to see if we can get a retest of our previous level of structure, 120.80s. And any opportunities to get short here. Man, this sounds like fun though. Yeah, we've got some wild. I've got some wild stories. I can't tell you all of them. I got some wild stories that involves. Let's put it like this. Let's see how can I do this without getting anyone in trouble. Trading event, broker, Fogo de Chao, MMA fight, St. Patrick's Day, non-MMA fight, very offensive cab ride. Yeah. That's about as much as I can give you without getting anyone in trouble. Oh man. That was an interesting night. That's what happens when you bring people from the UK over, right? You people over there in London. This is why we don't hold events anywhere. We don't bring you guys over here because you get us into trouble. You and your morning breakfast drinking. We had a guy from Ireland over here. He's eating like scrambled eggs and a beer. I'm like, what are you doing? It's like 8 o'clock in the morning. He said, catch up, Yank. I said, oh no. I'll stick to my apple juice. Stick to my apple juice here. So what are you doing? So you never heard of breakfast beer? See, Yankees are soft. Oh, and then St. Patty's Day, MMA fight, Fogo de Chao, non-MMA fight, offensive cab ride, and then it just plane ride. Interesting time. Good. One day, I'll tell you guys that story when you grow up. All right, Euro Yen. We're looking for a short opportunity here. Again, this is going to be a day trading opportunity. Just swing trading wise, this is going to be your first level to look for. I think, Chris, I think this might be the example that you gave me this morning. I'm not sure if this is fair, but this is going to be the first level you're looking for. The better level for swing trading is going to be up in here as we come back up to previous level of structure, especially around this big red candle right there. But definitely worth a shot if we come to that 120.80s level. You said broken cipher. Did we close past the 1414? Yeah, we did. That would have been a good reason as well. Let's go down to the 15-minute chart. You may have a smaller one on the 5 or 15. Let's go down to the 5-minute. I think we're going to be short. I haven't had Constellation up this whole time. Maybe we will. Let's see if Constellation grabs this. Constellation, activate. Nope. Might be too small then. All right. Well, that same level we were looking for, we're going to have a potential cipher formation there. Swing high to swing low, X to A to B, B to C, CD completion right at 120.93. This can be, for you guys looking for trend continuation opportunities, this can be your entry reason to get short. That's not a bad opportunity. It's also not a bad opportunity right here at this structure shelf. You see how the market comes down and then we kind of just shelf off right here. That may not be a bad opportunity either. Let me load up a range bar chart here of Euro Yen and see if this gives us a clearer picture. A pint, a pie, and a punch up. All right. Range bar is not going to give us too much of a different story. You can kind of see the consolidation that came right here. For any of you guys that are like breakout traders, you've got a triangle right here, so you can look to trade this breakout to the downside. Selfishly speaking, I'm hoping that it goes up because I would like to get involved, but you can trade a breakout here to the downside. There's a few ways to do it. You can sell it right now. You can put a sell stop right here and try to catch it on the way down, or you can wait for the breakout, kind of like the daily time frame, the retest, and the move below. So a few different ways. Do we have any 10 o'clock news today, guys? Do you know? All right, guys. We are back. Still looking for trend continuation opportunities. This is a pretty awesome day. A lot of the time we're doing a lot of pattern formation trading. We're doing a lot of counter trend trading. This is a perfect day of what it looks like to kind of be a trend continuation or trend following trader. If you remember, we looked at the euro dollar earlier, right? We can kind of erase this. I did take a short or a long opportunity, got stopped out. We were looking for a retest of structure. So the market was doing this. Came down here. We were looking for a retest of structure in our zone. Didn't get a chance to enter. And the market rolled over, put in a new structure low. So the question is now, what's next? What's next? Aside from waiting for your range bar charts to load, Ian. Yeah. You keep looking for the same thing. Now, we do want to bounce out to the higher time frame to make sure there's still room to go down, but you keep looking for the same thing, right? This situation is no different from the last, right? New structure low. We look for the outside return, and we look for a chance to hop on. And this is one of the things you can do this on minute charts a lot. Sometimes it's a lot easier on range bar charts because you get these much clearer moves. And you just sit here and you wait for each opportunity. And if you get the opportunity, you enter. If you don't get the opportunity, you stay out. So you just repeat the process. Now, again, we do want to go up, I should say, to our higher time frames. Let's go to Euro on the 60. And we do want to make sure we have room to go lower because we don't want to be involved in trend continuation, right? If there's a big stinking structure level right here, this may be the bottom. But we want to look at where price action can come to next, right? Our next level of structure is really right down here. And just kind of think like the other trader. Right down here, let's say 113 even. So we're close to it. 113 even is probably the next place that we're going to run into previous structure support, a little bit below that, 112.91. So until we get down to 112.91, we can still look to take this short. Once we get down there, then we probably want to stop. You can see the RSI is dipping oversold already as well. That doesn't really tell me much. RSI can be oversold forever, but we do want to have a stopping ground. So you don't want to look for those opportunities forever. You want to make sure there's room for the market to actually move down. So about 113 flat would probably be the last level I'd look for, which still means you can get involved because if we get a pullback in the structure, you're getting short around the 113.25s. There's still 25 pips to 113 flat. There's still 20 pips down to 113.05. So a cool example of that. And again, if you're going to be a range bar trader, you may only want to have a handful of pairs, 4 pairs, and you just look for these opportunities all day. What I would actually do is this. Someone asked me about screening earlier. And again, that's not something I typically do in the Forex market. I stick to a set portfolio. But say back when I was trading stocks, I used to try trading penny stocks and whatnot like that. You would screen different stocks. You may start off with 100 stocks and you may screen through them and you want to pick which stocks, have enough momentum, enough volatility for you to be involved in for the day. So you would take your 100 stocks and you'd dial it down to a list of maybe 10 that you're watching. You can do that with Forex as well. So if you have a normal trading portfolio of, say, 10 pairs, you could look at those 10 pairs. You can say, I'm only allowed to trade 4 on the range bar charts. You do your top-down analysis. You look at what charts have the movement that you're looking for. You narrow down those 4 pairs, and those are the ones that you concentrate on for the day. Would it be better on range bar charts or just normal 5-minute charts? Personal preference. I think if you're going to be a day trader, I think there are benefits to both of them. On a minute chart, you can look at candlestick wicks, which will tell you an important story of their own. On the range bar chart, you'll get a kind of a smoother look at price action, which some find easier or I don't want to say better, but easier for analysis. So I don't want to say one's better than the other. They're different. I'll put it like this. If I'm going to momentum trade, if I'm going to try and trend follow, wicks of the candles aren't going to matter too much. Typically, the wicks of the candles for me are going to matter for counter trend trading opportunities where I'm looking for a level of structure to get tested, rejected, and then looking to get the other way. If I'm looking to trend continuation trade, I kind of just want to see the ebbs and flows of price action. Yeah, Euro's still pushing down. It's only giving us shallow retracements. That's the issue. This is days like this is where if you're a really aggressive trend continuation trader, like say you're only looking for 3D2 retracements, you're getting all of these. You're getting all of these. Even right here, look at that. You got the little boom. I'm just not that aggressive because guess what? If I'm trading this, I'm not a trend following trader. So stops need to be up here. I only follow the trend of my secondary target. So stops need to be up here for me. My targets are right down here at a retest of previous structure low. So this is not a good risk reward for me. Something like this, right? This is not a good risk reward for me. Right? That's why, and again, we talked a little bit about it yesterday. Do you guys understand the difference of how we classify trend following and trend continuation? Let me do a poll question. And this is just how Jason and I refer to it. Obviously, terminology is terminology is different in different places. This is not. I don't want you guys thinking this is the end all be all. But when you're with us in War Room or when you're with us in the live room, this is how we look at trend continuation and trend following. It's basically a difference in target taking. Just wanted to get an idea. If not, I'll clear it up. And it'll show you why I haven't been able to enter these trades, where someone like Lax has. Good job, Kenny. All right, so about 50-50. So here's the difference. It's all about taking targets, right? As a trend continuation trader, I want to take targets at previous structure. So if I'm looking at a move like this, right? I want to take targets at least first targets, I should say. The syndicate, obviously, we're 1 in, 1 out, but in the real account, first targets are going to be at previous structure. Because my stops have to be above previous structure, right? This gives me, if I were to enter at the best possible moment right here, right? This gives me a risk reward like this, right? Now, is this a risk reward that I want to take, guys? Consistently? What do you guys think? Well done, Tommy, as well. Yeah, I don't want to take a risk reward like that. So for me, I have to wait until price action comes deeper up into our retest before I can get involved. So if you're involved in a very strong trend, right, the stronger the trend, the shorter the retest, right? Or the shorter the pullback. If it's a shallow pullback, it means a strong trend, right? Now, if you're a trend following trader, you're shooting for an extension. And that extension can be something, it could be an ABCD pattern down here. It could be a Fibonacci extension. This is going to be a 1414, right? How did I know that? He's so good, right? 1414 down there, right? So let's just pretend you're entering at that same point where I originally entered or originally did the example at, right? This trader has the same risk, right? Stops above previous structure highs, but now look at the reward. Does that look good? Yeah. So, I mean, and you'll get people, I don't know if this part's going to make it to the post on YouTube. You'll get people all the time where it's like, how come you didn't trade it? If you knew it was going to go down, how come you just didn't sell it? I've had that so many times. Well, if you made the prediction that it was going to go down, how come you just didn't sell it right there? How come you wanted to wait till higher? And those people have no idea how to deal with risk reward. It's not an investment. You just don't like understand an investment, right? You find value in something, you buy it because you're going to hold it for a long time. Trading, we've got to make sure that risk reward works, right? And if I'm putting myself in a position where if I lose, I'm going to lose more than what I would make if I win, that's not a position I want to consistently put myself into. Does that make more sense now, guys? So it stinks when you get strong trends, if you're going to be like that. But if you're trend following, you have a much bigger cushion because you're shooting for longer targets. Now, as we mentioned, there's pros and cons to everything. There's a reason why I want to take first targets off of here versus down here. What do you think that reason is? Yeah, structure. There's a much higher there's a much higher percentage of price action reversing right here than it is right here. And also my philosophy is grounded in the power of structure, and I don't want to fight that off consistently. I tried that in the past, being a trend following trader, and it doesn't mesh with my philosophy to consistently fight and have to break through structure, especially when I'm a counter trend trader as well. And as soon as we get the structure, the counter trend side of me, it's screaming, structure leaves clues, hold, hold, hold. So, but there you go. Phil says another good session. Thanks. I really wish we could have caught some of that euro move, Phil. Really wish we could have done that, but you guys got to see it, and I hope you get to see that. This is trading. The majority of trading. When you look on the internet, you hear about all the glory stories. You hear about all the wins. Sometimes you hear about all the losses, but the majority of trading, guys, is the grind. It's doing a lot of analysis and not getting involved, right? Think about it like your favorite sporting match, right? You watch it on ESPN the next day in the morning, right? And you see all the highlights. You're like, oh man, big home run, or oh man, look at that free kick, right? Look at that big Hail Mary home run. And it looks all awesome. It gets you all pumped up and fired up. But when you watch the real game, what happens? The majority of the game is a bunch of nothing. If you're a football fan, 2-yard run up the middle, drop pass, sack, punt, fumble, punt, 2-yard pass, right? Or if you're soccer, it's even worse, right? If you're watching a team that has a lot of possession, right? Ole, ole, ole. Baseball's even worse than that. Ball 1. Ball 2. Right? That's what trading is. It's a lot of analysis. It's a lot of hitting that right click button, drawing tools, remove objects. But it's all worth it when you catch those few good trades, and that's what you want to take. You want to get those few good trades, and while you're waiting for those few good trades, what's most important is that you want to stay out of the bad trades. You want to stay out of the bad opportunities, because those are the ones that will blow your account while you're waiting for the good opportunities. Right? Those are the ones where you're in the airport and you're waiting to get some food, and you're just sitting there and you're spending money on other stuff. Right? You're sitting there like, man, I'm supposed to get some food, but my flight's delayed. Let me just buy this stuff for no reason. You're slowly bleeding your pockets. You come back and you're like, why did I do that? Because you were bored. So, thanks for the good session. Very good learning. It's good. Hey, do me a favor, guys. I've been doing the recordings for this. If you guys like it, just leave a comment under those recordings on YouTube. Just say, hey, really enjoyed the live session. That does a lot for me. Again, I'm trying to reach 25,000 subscribers. And I'm trying to build a good community as well. So I've noticed that positivity makes the negative people and the trolls stay away, because they don't feel comfortable. So if you like what you see when I post it on YouTube, just leave a comment underneath. Just something as simple as "good job," and share it with a trading friend. But until next time, Canada, it would be a 26.18 type of trade, Tim, but we don't technically have a double bottom, so it wouldn't be a 26.18. But same type, and I get what you're saying. Same type here, where you're looking at a pullback in the structure. I would look for this level right here if you're going to look for it. Right in that level, around where we started seeing all these wicks to the downside. So 26 type trade, but not technically a 26. But you can trade it the same way. So, all right, gang. I'll see you tomorrow.